I'll take one for the team too.
No, you guys are good. All right, it's going live right now.
We're just going to operate in silence.
We're ready to go. I mean, we're live.
No, I know as soon as you said we went live, it just went silent. So I was like, oh, okay.
Yeah, we're just going to look at the S&P 500 or Bitcoin chart. We're just going to look at that, and everything else can just go to hell. Monkey, are you any less bearish, or are you still in another leg down camp?
Yep, I'm still there. No change for now. I think it's nice to see this rally today. It's I think it's precarious going into the CPI tomorrow, and I just don't see a way that we get out of our current situation without a recession or getting close to it in the Fed breaking. And the recent what's been going on with the war, just kind of the cherry on the top of the inflation problem and the whole thing that got us here in the first place, which is rates and velocity and Fed potentially making a misstep. I think what's gone on recently has only made that worse. And even if the war, goes away tomorrow, I think there's going to be a long-lasting impact from sanctions and so forth. And, I don't think countries are going to turn around on a dime and say, Russia, you murdered a bunch of people, committed war crimes. It's okay. We're going to go back to buying your oil, and, all that stuff's going to go away. So I think either the economy folds on itself, which I think is going to happen. I think the Fed's going to do minimal. Like I've been saying, probably, I don't see them doing more than 3 hikes before the economy just implodes with everything that's going on. And then they pivot. And I think that's where you get the inflection point. Or they hike us, so aggressively into a recession. I just don't think the economy can last that long to sustain the 10 to 15 to 20 hikes, or some of the ridiculous forecasts that have been out there for what I think are ridiculous forecasts for a number of hikes. The economy, I think for better or for worse, we are in a Fed-driven, liquidity-driven kind of economic cycle. And when that dries up, the economy heads down, and when the taps open up, we head back up. So I just don't see how we avoid a recession. I think with that, there's another leg lower coming in the markets when the markets realize what's coming and what's going to be needed to break inflation.
I was being facetious. I saw your QQQ short.
Oh well, yeah. Anytime I can put my 2 cents in to reiterate, but figured I'd fill some of the empty space on here too.
Yeah, no, thanks, Monkey. I did want to tee you up for a really good answer, but I also knew I knew the answer to the question in which I was asking.
Hey, I'll answer rhetorical questions all day.
GP, I saw you put out a nice little chart for the Bitcoin.
Yeah, I figured I'd throw it up. I'm on the opposite side of Monkey here, but that's okay. I've been wrong. He's been right. Not necessarily wrong, but I just didn't realize it was going to last this long. But it did. And yesterday's price action, to me, I'm not talking about fundamental views. That stuff doesn't. It's way above my pay grade, so I'm not going to go there. But yesterday's price action was nearly as identical as the 323 bottom back in COVID 2020. So if you saw my note last night, it talked about this, and I was expecting a gap and go scenario, and we are busting a move here. And so far it's working out. Let's see how it goes. I'm assuming it's going to be that, like my general thought has been, this is options market related, and we have a big VIX expiry coming into next Tuesday, I think the 15th. So I think this lasts till then, and then you get chop, 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 chop in OPEX at the end of OPEX week, and everyone gets bearish again. And then post OPEX, we see a bit more clarity. So that's my general kind of viewpoint here. And we'll take it a step at a time. So that's really like, I'm still in the camp that we're all-time highs by end of second quarter, regardless of what narrative or what fundamental story kind of comes out of all this stuff. Can anyone, what was it? Because there was a ceasefire, we stopped going down? Is that why? Is that why we stopped today? I don't even know. I wasn't even paying attention to the news at all. I have no clue.
I think the ceasefire is because I think it's being seen as there is an off ramp, but over my 40 plus years of life, I've learned that you can't really negotiate in good faith with crazy. So I don't know. I was listening to some actual news about Russian military movement, just historically from what they've done in Georgia and Chechnya and the Crimea. And every time that they have reached out for a ceasefire, the Russians have basically used it as an advantage to recollect and reorganize themselves and then break the ceasefire. So I'm not as optimistic about that news being a catalyst for the market, just because they have a history of not using ceasefires as true ends to peace and diplomacy.
Yep.
Yeah, I mean, oh, sorry, go ahead, GP.
No, all I said was I understand that.
Yeah, no, look, you all are the technicians. I'm not as heavy technical. And, obviously nobody knows what's going to happen here. I just have a hard time squaring, if rates are going to have to go up, significantly aggressively, how the market, and that's a big call, GP, all-time highs by end of June, end of Q2, you're thinking? I mean, I would say that would probably surprise pretty much everybody except you, myself included. And I hope it happens. I hope it for the people who are long. I hope it for the people who are on the verge of retirement, including myself. I really do. I just, and that would be, I think, really shocking to me if we're able to get there. And who knows what happens, in the interim, if it does happen. I think it involves the Fed. I don't see how we have inflation running 6, 7, 8, 9%, and the markets get back to all-time high. I think that involves, some sort of economic impact and demand destruction where inflation falls off a cliff. I think it's going to happen. I just don't know that it's going to happen that quick. And I think we've got to get close to recession. We've got to have people, house prices start coming down. We've got to have demand start coming down for that to happen. I mean, still, looking at the multiples, I think seen so many charts recently. Historically, the multiples forward on the S&P and NASDAQ are still above historical averages. I think they're about 10, 15, 20% above. And I mean, it makes sense. I mean, based on the interest rate environment, if it was static, but again, with the forecasts, at least as of today, March 9th, those rates, are forecast to go up pretty significantly here in the next several months. Again, I think they're wrong. But that plays into kind of where I think the markets are valued right now and potential upside. In a tightening environment, I just don't see how we get back to where we were a few months ago when we were, at zero and, Fed was still a few months away from liftoff.
So, like I said, I'm not going to talk about fundamentals. I was looking at the XPX chart from the last time we had runaway inflation, 79 to 81, right before Reagan became president, I think. And he tried to curb. So we had a Fed funds rate of 18% and an inflation of 13%. And yeah, if you look at the chart of SPX, you would never think it did what it did, right? It 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 was up, right? I guess that's all. It was up the whole time. So I know that's the narrative in terms of what people are talking about, like how easy money, like these companies are still making money hand over fist, right? Like what if you take a look back even just yesterday, Apple didn't they didn't shy away, right? Like if they thought there was going to be a bigger issue here, they wouldn't be releasing new products. They wouldn't be doing all this stuff. They've been in sync with their consumer base since 2007, 2008, right? And so they were still out releasing yesterday. Maybe this is the one time they mess up and everything dies and everything goes to hell. But there's a lot of things for me here saying that we can push up even with rates being higher. I think we just had a reality check even before rates went up, right? So 2018, everyone is comparing to, that happened because the Fed was tightening, because the Fed was raising rates. None of that stuff has happened, right? And we've preemptively run down on many of these names well before any of that like narrative started even going, right? So I'm in the camp that we're closer to the bottom, and I know you are too, Monkey, than the top, but I don't know if any of those narratives need to hold for the market to do what it does, because I fundamentally don't think those are connected.
So GP, what are you doing if your scenario plays out and we're at all-time highs end of Q2? Are you selling into that? I
am. Right. Okay, so I will be. So I'm in the camp that we're in a blow off top environment potential. It could go off higher, but like, so I was, when the correction first started, I was in we're going to have a quick swift correction down, and then we have a blow off top from that. Because it's been quite prolonged here, I will have to adjust that view shortly, not shortly, but I think as we get more data on the charts, for me, that view might be adjusted moving forward, that it's not a blow off top, right? The demand is super strong. People have been deprived of things for many years now, right? Since COVID pretty started, any travel, anything else, lots of disposable income. I think the demand is there for the longer term.
Yeah, but do you not,
and they can't
sorry to interrupt, but do you not think that now that the market is, in a questionable downdraft, many people will curb that spending? And I think that's a reasonable
I haven't seen any
thing.
evidence of it yet.
And
right?
the market's
So
not
you're
the
right.
economy, right?
That's
the
my inner
not
circle.
The economy, because hiring is still happening. There's still lots of job openings, right? We're down to 4% unemployment right now. So the business community is saying we need more labor, and the consumer is saying we are sitting on cash and we are spending. And I think this has been the disconnect that I've seen, I've been paying attention to, from what happened in previous recession cycles when we've had to, raise rates, or there's been oil at $100 or what have you. Is this is the big differentiator between all those different periods of time.
Okay. Yeah, there's a lot of things that I think why we saw this, right? We saw the imminent recession coming in 2020. Everyone saw COVID recession coming. Everyone was panicking. And what did the markets do? Right? Market said, I hear your recession, but I raise you, right? Like it literally said, your narrative is cool, but we don't agree because it might be a short-term thing or whatever it is. So I don't know what the narrative will be when we are in June. And what I'm following is a lot of the charts. Like I said, fundamentals are way over. If you want to talk about fundamentals, I'll bow out and have Kyle Common King join us, right? Because he'll be able to talk about this stuff a lot better than I ever can. I'm I think Seth, you were talking, right? Was that you before?
Yeah, no. I think it. Look,
I've been saying this since we first started chatting. Momentum of the market has nothing to do with where fundamentals lie. And I think it's options. What's that?
I'm not going to argue that point.
Yeah. Right, and so like everyone, but on a down market cycle, everyone comes out and talks valuations, right? And like when I talk about certain valuations, like why was Snow holding a bigger valuation than every other cloud play? There's no real fundamental conversation for me to come back to that people can argue otherwise, right? I was like, well, now it finally came down to where the valuation is still crazy on Snow. Yep. Valuation still crazy on Rivian. Valuation is still, Nikola is the best example I can give you. It made $57,000 last quarter. It's 57,000.
I think that's it. When you think your stock is better than whatever the other garbage thing is out there, that you just look at, well, they're paying that. So maybe mine is maybe everything is crazy price. And I think that's like the I don't know, say what I missed, not missed, but like thinking that because my stock was not that stock, that, it's not a bullshit. It didn't make $57,000. It actually is making money, has a product, maybe not making money, but not making 57,000, but which is not the case. The market, as much as we like to think my stock is better than your stock, it's a market, and there's going to be, they trade together. And
yeah, but that's to me, when you have valuation conversation, it either applies across the board or it doesn't, right? That's maybe I'm being a purist in these conversations, but if you're going to talk about valuations, to me, Apple is high, right? But yet it has been the strongest across the board. It's historically high.
Right, I like to think of Apple has earned that, and there's a reason why it's high. I mean, I always think when people say a stock is cheap, there's reasons for when Facebook was cheap. Oh, look how cheap Facebook is. You find out there's a reason for it. When you see everyone buying an Apple iPhone, like they just there's not someone going to buy something other than they're not buying a Samsung. They've got that user base, and they're just going to keep every 2 to 5 years, they got to get a new one, going to subscribe to all their crap and repeat. There's a reason why it's expensive.
Yeah, and I'm not arguing why it's expensive. I'm saying it's expensive because there's more people who support it than there are who don't, right? Like, so yep. I just struggle with the valuation conversation. Every time we have one of these for the last, as long as I've been involved in the markets, every time we have one of these drawdowns, it's valuation conversations. And then we hold and we push higher, and all those people who are talking about valuations or PEs or whatever it is kind of disappear, right?
Yeah, there's no
argument doesn't matter anymore.
No, they don't matter until they do. Valuation doesn't matter
with everything. It doesn't matter until it does.
Yeah.
And that's what I'm saying. It doesn't even matter in this down cycle here. This is a momentum / options market driven move down, right? And we've been talking about this for a while. I think the derivative market is continuously starting to become the actual market, right? And it drives a lot, especially in like a low liquidity, non-buying, everyone's scared for running for the mountains type activity. You can push stuff around quite often. It does, and that's a general statement. It's not necessarily applicable across the board, but I've seen it in a lot of names. Like I'll literally be watching the options flow. In comes this 1,000 call block on Amazon 2 days out that they're selling, and immediately price retreats, right? And it just drops. So like the cleanest example I remember was Friday OPEX during November. It was on the verge of breaking out, right? That November 17th or 19th or whatever day that was, or 21st. It was on the verge of breaking out. At 2 p.m. in came this massive options call seller in the middle of OPEX, and it got destroyed. It went from being up like 70 or 80 points on the verge of breaking out to being down 100 points by the end of the day in 2 hours. So like that's just it's just stuff that I see. But like, you know, I'm not trying to convince anyone on my thoughts or my views. I'm trading my own portfolio, and everyone's got to do what's right for them.
That's right. Hey, Monkey, you want my really precise, technical and analytical point of view?
Give it to me.
Sellers are exhausted. That's when we find the bottom, and obviously sellers aren't exhausted. Let's jump on to something else. Sam, our good friend on my way to money, asks, what is your favorite mega cap right now based on price action? Anybody want to take a stab? I know for me,
Give it to us.
Apple. I mean, Apple's held, and I know there's going to be the conversation of Apple can still draw down. Yeah, but Apple has remained the strongest of all the megas. I mean, Amazon's been a shit show. Microsoft has showed weakness. I'd say Microsoft might be second. Google's got the split that's 6 months away that we've talked about that's problematic. So
stupid Google.
You know, otherwise I probably would have picked Google if it weren't for that. But I still think it's Apple. So I don't know how, Walter, I don't know how much deeper on the mega caps you want to go. You can define mega caps in a bunch of different ways, but I kind of leave it as Microsoft, Apple, Amazon, Google.
Well,
I don't put Netflix in that category.
Yeah, well, if he's asking based on price action, I think it's a no-brainer. It's Apple.
Yeah.
If you're asking me based on price action, it's Facebook.
In price destruction?
Right. No, it's hard, right? Like, so.
No, I mean, it's not. If we're looking at price action just on its face, like Facebook doesn't even compare to the strength that Apple's had over the past 6 months.
I think our definitions of price action are probably different.
Fair.
So
GP speaker.
So to me, Apple has held really well, right? And it's doing well across the board for the last couple of months. It's holding, and that's what's keeping the markets kind of even from like selling bigger, right? So it's been nice for it to hold. But what I'm seeing in this price action is for Facebook is it tried to break lower, it did not break lower, it is now breaking higher. So if we're talking about price action, is like, to me, Apple can just continue to go sideways, right? It hasn't shown strength, it hasn't shown weakness. To me, here is what Facebook is showing is that it's launching from a bigger base. It's got strength showing up here because it couldn't break down even after all these headlines and all this other stuff. So I like Facebook here based on price action over Apple. But I'm also biased. I'm talking in my book because so like I'm not gonna, but that's why it is my book, right? That's why I bought Facebook and not Apple.
Well, I guess it depends on what your strategy is, right? If it's for a long-term entry, I'm not going to be able to disagree with you that Facebook's probably at a good point to get long if that's your goal. Just based on price action, though, who's the leader of the mega caps? I mean, it's unquestionably Apple. I mean, you can't even compare this drawdown to anything that has happened. It's 40% in a month and a half.
Yeah. So maybe I'm
what
misunderstanding
GP said.
question,
I mean,
right? So like, if the question is what would I be buying here based on price action, I'm not buying Apple here. Is that better answer? I don't know.
I think I understand what you mean. I just want to be really clear for Walter and how we're explaining price action. And again, I think for a long trade or a long entry, you're probably better to buy Facebook here. But as far as what my favorite is based on price action, I still got to answer Apple. And he wants to know why is the upcoming split a problem for Google? GP, you wanna take that?
So it's not a problem for Google. I think it's a good thing overall, right? Like more people can get into the markets. They get a chance to buy Google 18 years later at the same price as the IPO, just a much bigger valuation. So people are going to feel good about it. It's a solid company. It's going to be around for a long time, in my opinion. They continue to do all that stuff. So like, this is not a fundamental conversation. This is more about, you've given Wall Street 5 months to collect premiums until we split, right? Like, so on previous like Apples and Teslas, you had a 20 to 30 day lead time on splits. So it was hard to reposition entire portfolios for this. But when you have 5 months to kind of prepare your long-term position, be like, oh, everyone thinks it's going to break out, so I'm going to use this opportunity that every time it's going to break out, I'm going to sell calls and generate income for myself, right? So I think you've just given, this is, I guess it lands in the conspiracy. I think you've just given Wall Street too much time to prepare for fuckery.
Yeah, I completely agree with that. I completely agree with that. It's not often that GP and I disagree. So that was nice that we had one on Apple and Facebook.
Yeah.
You know, I'm going to pull up what I consider to be the mega caps, Walter, just for you here. Facebook is not one that I consider. It is a mega cap, but I don't consider it in my group of mega cap that I really like. So I'm just going to chart all these real quick. MAGN, Amazon. There we go. So Magnat, Microsoft, Apple, NVIDIA, Google, Amazon, Tesla are the 6 names that I like. Facebook is the orange, as you can see there, Walter. So if you think Facebook is really good long term, it is at a good price point, most likely to maybe take a sniff. GP, what did you get in? You said you got in like at the.
I had my order at 190.
190, yeah, 190, and it went a little bit below.
Yeah.
So I think down there's a good spot. If I were to take one of these 6 right now, I mean, I would probably be looking at Apple, NVIDIA, and Tesla, just based off of.
All right, like, I think these are all good choices. From where they were, I think also Facebook has the most risk. Granted, yes, it's already taken a good haircut, but I still think of all the names, that's the one that high risk, high reward. I think for the rest, in terms of upside is probably a lot higher, but I think there's downside. I mean, I know
and these
Monkey's
charts
got
are deceiving. Sorry, Seth.
No, that's it.
These charts are deceiving too. It just shows you the relative move in all of them.
Yeah.
So
when I'm talking about the Facebook price action as well, I'll look a little bit more clear, is that when you have a company relative to its peers in the same conversation, at the valuations that we talk about, right? Like, it's cheap, right? On all kinds of metrics. So why I think it's stronger is because it's sitting at a 3-year base support, right? It's not breaking down. It's kind of tested back-to-back months here, and it's looking off a 3-year kind of basing area. So to me, there's a, like, as they say, the higher the base, the higher, I mean, the bigger the base, the higher the space, right? So you come back and test the base and you hold, the price action here for me is stronger. That's why I think it's stronger than Apple, right? Apple's basing at the top, but if it decides to break that, there's a lot more room to the downside for Apple than there is for, say, let's say Facebook.
Do not disagree with that thesis.
But you also think that if Apple loses it, that it's taking everything else with it?
So yeah, probably. Apple has, like, this is where I have struggled during this whole entire time. For the last decade, we have watched Apple break down before the markets every single time. Or let's say not every single time, because someone will be very precise about what I say and then call me out on it. Most of the time.
Not here. And you're amongst friends here, so continue.
Yeah, no, but there's a live session here too, right? So what I've seen over the years is Apple has let us in both ways, right? So all of a sudden the narrative shifted on this particular drawdown in saying that Apple will be the last to fall. Generals are last to fall. And I've been struggling with this conversation because I'm like, Apple has been, like, it's broken down nearly the same day as the market breaks down or a week before, right? Tags an all-time high, but then struggles to get back to that and starts breaking down before the markets do, which kind of makes sense because it's such a big part of so many ETFs that if Apple breaks down, the markets come with it.
I mean, and I feel like Amazon's been the source of funds versus Apple. That, Apple gets their dividends, so people are going to keep it in there. And again, it doesn't have as much of a, the price is.
Yeah, it's when you have dividend investors, you have a different set of additional support that comes in,
100%.
right? If Amazon decided to do even like
anything,
I don't know, a 10 cents dividend on its shares, they would introduce an entire level of investors that would be able to get into the stock, right? That are currently like, Amazon's a great company, but you don't pay me anything to hold, so you're not part of our fund, right? So that we've had this conversation, not you and me, Seth, but I've had this conversation with others, is like, it's a hard balance, right? Do you want them to invest in their business and continue growing, or do you want them to appease shareholders by introducing a dividend and bringing in a whole new base of investors?
Do you have any? I'm sure a lot of students of Apple. When did Apple start paying a dividend? They weren't always
2013 or 11. I can't remember exactly when it was.
Worked out pretty well for them, huh?
Yeah, and when they introduced the dividend, Apple was like in this big downtrend, and everyone's like, the growth of Apple is dead, which is why they're introducing a dividend. I remember the rhetoric because I was buying the rhetoric, like not buying the rhetoric, but buying the stock because of the rhetoric, right? Like,
but nobody's buying Apple now for the dividend, right? Like, it's just not happening. I would rather them just continue the dividend and increase the buybacks. But whatever. I've gone hard on the Apple needs to buy back more shares for a very long time.
I mean, I think that's always been.
My chart says Apple started its dividend in 2008. I don't think that's accurate.
What's that, GP?
My chart on Thinkorswim says it started in 2008, the dividend. I don't think that's accurate.
Let's find out. Let's go to the Google machine.
In 2008. Everything was dying in 2008. They stopped it cold. Yeah, it started again on July 24th, 2012, directly from the
2012, yeah.
From the Apple investor website.
Yep, 2012.
Yeah, so 2012, July 24th. Let's see what the price was there. It was $14. And the rhetoric around that time frame, I don't know if you guys remember, or even in the markets, was Apple's done. It's no longer growing. They're introducing a dividend, all this stuff.
Yeah, Apple is hated.
And we even came back to retest that level back in 2013. that same level from when they announced the dividend.
That was a long time ago. I mean,
Yeah,
it wasn't really that long ago, but it was in market years. That was a long time ago.
Yeah.
Hey, sorry about that. I don't know if anybody was asking for me. I had to take another call and back.
Oh, it's okay, monkey. You got to do you, baby boy. We're just talking Apple. Where's my invite? Zach wants to know. Airbnb to 9,000. Well, if you're saying Airbnb to 9,000, you're not getting an invite, Zach.
I think AMC gets to 9,000 before that.
I haven't looked
The
at
fact
our
that AMC and
memers in
GME
a
are
while.
still trading where they are, it should tell everyone that the options market and short interest and all that stuff matters so much more.
Agreed.
There's no reason for any of these.
If things collapse, I mean, both of them should be. I mean, AMC should be under 5 probably, and GME should be under probably 25.
What name?
All right, I'm allowing Zach to join.
GameStop
Zach, you can
Off
only
market.
come in on this premise. You leave your Airbnb topic to the first 1 minute of your entry. So go, you've got 1 minute.
All right, Airbnb to 9,000. Buy leaps now. Short SoFi. That's it.
Okay, and you're
what
getting
was the
kicked
second
out.
one? I heard short SoFi. What was the second one?
Long Airbnb, 900.
I
Short
muted him.
SoFi.
He's no longer allowed to talk.
Okay, I heard long Airbnb, short SoFi. I thought I heard something in the middle.
I'm just joking.
No, that was
Zach.
it.
You can come back.
But I think I said buy leaps on Airbnb. All jokes. I'm not a financial advisor.
It's all entertainment and education. Sam,
We are
that's
not entertainers
funny.
either. We are nothing.
Right.
Speak
So
for yourself. I find myself entertaining.
so the 3 peaks could be dead if SPY gets over 428 and blows past it.
Here you go. 3 peaks.
Look, I'm just being real. Nick's not on the call, so I'm trying to keep that bear mentality in the chat. Well, Monkey's in here, huh?
I need
Yeah,
some support here, man. I appreciate it.
Oh shit.
It is funny how the clearly we're all wanting to be bullish, but I think there are others that have more conviction than others, and then there are others that are,
Cautiously optimistic.
show me.
Yeah.
For sure. I'm a permabull at heart, and it's hard for me to get bearish, but and I look, I think for GP and I don't differ that much. I think it's time frames. I think it's interesting, GP, about your call about, I think I'd seen you before say that you were thinking blow off top coming soon, and I heard you say that you're going to reevaluate that. I think I'm short-term bearish, but longer-term bullish. I think we're about to make a longer-term bottom soon. I think we resume the uptrend and probably hit new all-time highs next year, maybe the year after. I'm not quite as optimistic as GP, but I also don't think we're about to fall off a cliff. Like, I mean, I'm sure you all have seen on FinTwit and stock twits. I mean, there's people out there saying like, 70, 80, 90% drawdowns. I mean, there's one guy on FinTwit, I think it's David Hunter, was saying, we'd have a blow off top kind of GP, what you're talking about, and then drop like 85, 90%. I mean, like NASDAQ, like 2000. I mean, it's some of the stuff out there.
I didn't watch, but Jeremy Siegel calling getting up to 5%. That, look, he's a respected name in it. I listen to him a lot. That's that should put a little, I mean, for me, put some, real caution into, there's downside to come. Not to say that, 5% is going to mean, everything drops, but you got to think it will hurt it significantly. Do you have any more color on that, Monkey?
No, actually I didn't watch the segment myself. Full disclosure, I saw a post about it that he was talking about, rates might have to go up to 4 to 5% because, basically Fed behind the curve, inflation is going to be rampant. Then you have Gunlock come out who, I don't really pay attention too much to what he says, but he's saying inflation is going to hit 10% this year, and rates are going to have to be raised much more aggressively. I mean, rates are in a long-term downtrend. They've been in a downtrend for like 200 years. I don't, anything that is a spike short-term, I think goes back down and probably even, below where we've ever been in terms of rates over the long haul. But yeah, some of these short-term calls are scary, and some of the predictions I've seen out there and some of the charts, are pretty scary stuff. I don't buy into that. I think we are going to bottom soon. I think it's just a matter of, to a certain extent, getting cute with it. And I think somebody, I think it was Anchors who had kind of called me out on it, saying, well, now's the time probably to be buying. And I don't disagree. If you're longer term, I think now is probably a good time to be buying. It's just that, knowing myself and others, people tend not to like to buy and then see it go down 20, 30% immediately, because most people will capitulate. And I'm not immune to that either. So I think if people are comfortable seeing, immediate buys and DCAing continue to go down for a period of time, I think now is a good time to buy, because I do think we're headed higher.
Hey, so we've got a special guest joining us from halfway around the world. The one and only Cookie Monster has entered the chat.
All right.
Cookie.
Hey, how you doing, guys?
How you
What's
doing?
up, Cook?
Now it's a party.
No, hey, I'm. It's just gone 1:15 a.m. here in Bangkok.
Holy moly!
And
Yeah, that's crazy.
I've just ended a 90-minute call with the guys who I manage on the group. So I'm a bit exhausted, but I'm more than happy to spend a few minutes with you guys. I've just joined, so I'm not sure what you're talking about. But
hey, Cookie, thanks. Yeah, thanks for jumping on. And I know you do your thing with your group, and that takes a lot out of you. So I definitely appreciate you giving us 5 or 10 minutes. But we're just talking about everything across the market. We're taking some questions from YouTube. We're just talking about how we see setups. Seth was just talking about this 3 peaks setup that he's posted in the past. But just in general, I know you're an ever optimist, but more than that, you're also dyed in the wool. How does my TA look? How is my chart setting up, right? So just interested in your take and how you're feeling about the movements that's been going on.
Okay, sure. I mean, there's potentially a lot to get through there, but let me just give you broad strokes on what I'm seeing and how it could help you guys. And I mean, first of all, the market is actually moving very similar to how it did. I've talked about the 2018 scenario, and I'm not sure whether you've covered that already. I'm sure I've gone through so many things. Okay, so it's actually moving very similar to how it did in Q4 2018. And what I mean by that is the trends based on the weekly moving averages are almost identical. Q4 2018 literally was 3 months of hell, and then it ended with a huge crash Christmas week, right? The total move down in the market at that time was around 24-25%, and we're pretty close to that now. And what I'm seeing is, I'm looking at the VIX quite a lot, and that helps to explain or to understand why the market is moving in the way it is. I mean, it's not usual to see the VIX above 35. The last time that happened was, around COVID. So one of the things that we've been looking at as a group is, for the market to continue to break lower, it would need to get into a space which would be very similar to what the VIX did during COVID. And without really getting into, basically what that means is the world will need to be in a pretty dire straits or to be in a pretty bad situation for us to get to those sort of levels again. I mean, it's very unusual to begin with. And, we will typically see corrections during the year, maybe 1 or 2 10% pullbacks now and then. But what we're seeing now is something that might happen every 2 years or so. And for it to get any worse, I think we will need to see an escalation of something, whether it's Russia, Ukraine, or a complete surprise with what happens with interest rates to see the market tip over the edge. And normally, I mean, I'm a mathematician, right? And so I use logic in a lot of what I do. One of the things I say is you can't bet on long tail events having high probability, right? If that makes sense. So you'll want to say, well, the chances of the VIX continuing to break higher from here are very low. And that helps us to understand, well, what's the likelihood of the market continuing to break lower? And I think the market, I mean, whilst it could happen, I mean, you can never say never. I think we're pretty close to a low in the market. I don't think we're going to see much lower. If we get any lower, it could be another 3 or 4%, if that. But I think we'll start seeing the market bottoming out and start moving higher, at least in the indices. So
that's where the consensus for us is too. We have some of us who think that we're on the way higher, but realizing that lower is still a possibility. And then a few of us are in the camp of maybe another leg lower, a few more percent lower, but we're closer to the bottom than we were, let's say, 2 weeks ago.
Right. And one thing which helps me is to have identified what might be markers to understand when we see the lows. I mean, you'll see, we'll know the bottom is in once we've pushed through a certain number of layers above. Then we'll say, well, with hindsight, that was the bottom. And one of the things that we can look at to say that are whether price regains moving averages or not. So if you remember the call that we were on, what was it, 6 weeks ago, 2 months ago?
Yeah.
I can't believe how time has passed. And we looked at the monthly charts for, I think it was for NQ. I don't know if you can pull that up just very quickly.
For certain will.
Excellent stuff, right? And what we looked at 6 weeks ago, 2 months ago, was how NQ would NQ on the monthly time frame.
Yep.
Excellent stuff. Would consolidate between the 9 and the 20 MA. And it doesn't make any difference whether it's the 21 or the 20 or the 9 or the 10. It won't make a huge amount of difference. And if you look at what happened in Q4 2018, it did the same thing. So back then, you see, if you just hover over Q4 2018, just before you get into exactly around, just a little bit more to the right, those red bars there, exactly right. So you see the price action you see there is very similar to what you're seeing now. I mean, in terms of how long it's lasted and in terms of how deep it's been, it's identical. I mean, it's uncanny how similar it is. And then if we were to drill down, you don't need to do this. You don't need to open the weekly chart. But on Sunday, we discussed the possibility we would see a strong week this week based on how the market moved in November and December of 2018 on the weekly time frame. And we're seeing that now. And it lines up with the VIX topping out at around 35, which is a key level which differentiates between a pretty sizable pullback in the market versus an absolute crash. So 35 is that level, and that's where the VIX has topped out this week, which is great. So what we're seeing now is both from a VIX point of view and from how the trends evolved back in 2018, very, very similar setups, even down to how we're seeing each week. So right now, coming into this week, we were expecting a strong bounce based on the VIX topping out at 35, and this ping pong match between the moving averages on the weekly time frame. And that's what we're seeing now. Now, what comes next will depend, because the timing is pretty good. I mean, you're going to the weekly, excellent. So if you go to the weekly chart there, so there's I wish I could point. Can I point to it? It might be easy. I'm not sure if I can.
I'm not sure.
No, probably not. Look, it doesn't matter. It doesn't matter. Look, if you go to, let me see, the week of, there's a green bar somewhere in there in 2008, just before the market crashed again. Let me see if you can find that. There, hold on, just a little bit more to the right, 3-4 more bars. There, that one. That's where we are. That's currently where we are, right? Now, we're seeing the possibility of a candle that looks like that on the weekly time frame, but at the end of the move, because we've already seen about 25%. So I mean, if you take a look at what the total move was from the top to the bottom in that Q4 2018, it's if you start from October 2018 all the way to Christmas, it's about 25%, maybe 24, something like that. Right, what do you see? 24.7, there you go. And the current move down from the highs in the NQs are about 22%. There you go, I know the numbers. Okay, so it's very close. So based on how the moving averages, and that for me is a good guide to trend, how the moving averages have developed over the last 3 months, this is as good a spot as any for the bottom in the market. Now, it doesn't necessarily mean it is, but it's a very good place for it to bottom based on where the VIX is, based on where the moving averages are. So whether this is the bottom or not could depend on what happens with what the Fed says next week.
Yep.
So whether we see a new leg down, I think will depend upon what's going to happen with the Fed. Now, my guess is, and this is how I set this up in November of last year, was the Fed pivot in 2019, at the end of 2018, basically was then walking back on a series of actions that they were going to take, which could be what they could plan now based on what's happened with Russia, Ukraine. I mean, a very typical response from the Fed is nearly always, we are going to monitor the situation and we are data dependent, and depending on what happens, we will take the necessary actions, blah, 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 right? I mean, that's what they always say. Well, things have happened since the last meeting that they never thought were possible, right? So they're certainly going to reference what's happening in the rest of the world, whether it was COVID or whether it's Russia, Ukraine, but certainly pressures on the global financial markets and pressures on the global economy, they will reference that. And they will say, well, as the situation develops, well, this is me just guessing and speculating, right? But all they need to do is to slightly walk back what they said they may do in 2022, and the market might see that as a green signal to move higher. Now, that would line up with the magnitude, the duration of the pullback in 2018, the rhetoric that was used back then, that saw the reversal. So I think, it's uncanny how similar everything is from so many different points of view. Now, how are we trading? So that's the backdrop. But how are we trading that? Well, what we're doing is what we normally do is, well, we recognize that there's a bearish trend in the market. So for those of us who want to take up positions, we have set, based on weekly and monthly pivots, ideal places to scale in. And what that does is it stops us from concentrating scales very close to one another in case there's a huge drop, because the last thing you want is one fat scale, because it just defeats the purpose, right? So we want to have scales which are sufficiently spaced apart such that if the market does break down again or break lower, then we have funds to be able to, I would say, capitalize on that, because I think it's an opportunity if the market does break down because of what comes next. And if that doesn't happen, then we've already scaled into initial positions already on the way down. And separately from that, we're trying to trade a little bit based, which is not easy. I mean, the high volatility that we're seeing is making trading extremely difficult during the day. But I think we've got some pretty decent tools which you might remember, which are helping us do that.
Yep. Hey, Cookie, I know it's really late there, and I don't want to keep you too long. And let's plan next week to have another one-on-one sesh with you and I. But
Sure.
These guys don't get an opportunity to speak with you that much. So I just want to open it up to them if they have any questions or if they want to hit you with something real quick. Okay?
Yeah, go for it.
I got a question.
Hey, GP, how's it going?
Good, man. I have a question. You were talking about probabilities and VIX being at 35. And if we do break higher from the VIX here, I think personally for me is that the probability of those one-off events that you're talking about that don't happen very often increase substantially, right? So my general viewpoint has been we kind of need to hold this area, otherwise there's a much bigger move coming lower. So like, do you think that if we do go lower, that probability of those one-off events increases substantially?
Yeah, I agree. I think so. I mean, that's why I think that 35 level is a watershed area in the VIX. And once we go beyond that, then I think we will start seeing major breakdowns in the market. I don't think we'll see 3 or 4% down. I think we'll start seeing, maybe 10% down or something like that. if I'm able to, can I just show you something very quickly on my chart?
Yeah, absolutely. Let me allow you to share.
Yeah, okay. Let me try and let me see what I've got. Let's see, which page do I go to? That should work. Let me see that. Right, so that's just a blank screen. Let's go to, let me see if I can pull up a very quick VIX futures chart. Now, what's interesting is, and I just noticed this a couple of days ago, but see if I can draw it. But do keep chatting if you want whilst I do this. It might take me a minute to get this down.
Yeah, so like that, I guess my question, that's been my kind of stance on what's going on with where the VIX was, with where the markets was. If we see this collapse, VIX explodes to the upside, and you start seeing these bit much, like when people have been talking about the third leg down, I'm like, that third leg down is going to be brutal, right? Like I that was my biggest concern, and that was my biggest thought, because we were already at a 23% breakdown and the VIX was at 35, right? So if the VIX accelerates here, and 35 is historically extremely high on the VIX.
It is.
So like if we break down here, you start seeing those exponential moves down, right? It doesn't become, I'm gonna break below a little bit and then reverse higher. It becomes, I'm gonna break down and keep going. That was my general kind of consensus and viewpoint, which is why I've been in the camp that we gotta hold this area, otherwise it gets disgusting to me.
It does, and you know, this is how the chart is setting up. So there is a rising wedge in the VIX, which is great, and it connects all the recent peaks perfectly. I mean, when you see price action like this, when something pulls back so sharply like that, then it tells you that this trend line is correct. I mean, it's a far more important trend line when you see such strong reactions from it like that. Now, what's interesting is, let me just see if I can draw on this as well. Let me see if I how do I do that? Maybe I can't. Maybe I'll just have to draw it from here. Can I draw on this?
I don't know, Cookie. I haven't done that.
You got a pencil there under the magnet. So about the middle of the chart there, go to the left, and under the magnet, there's a pin.
Okay, well, yeah, okay. There's one here, but there's probably a better. Let me think. Under here, you mean?
Going down like 8 icons, where it has a little pencil.
Yeah, you're almost there. Keep going down. Keep going.
4 more.
This one here.
1 more. There you go.
Oh, 1 second. I'm sorry for being so stupid.
Maybe. I don't know.
I'm not sure if there is one there, but
no.
They're in drawing mode. There is I think scribble or something here, right?
Yeah, it's under text probably. No?
It's not there either. I know it's under here. No, it's not that. Oh, this is like a scribble or something, right? Or drawing. Here we go. Damn it. Sorry about that. Holding up all your thousands of viewers on this. A brush. I think it's called brush.
Yeah, there you go.
There you go. I think it was such a weird name, right? So you've got these areas over here, like that. Now, what's interesting is there's a filled breakout there, and it happens at 35. So this is this 35 area that I talk about. Now, the top of the wedge doesn't get much beyond 35, right? So it doesn't get much beyond 35. So we know that above 35 it starts becoming much more interesting. At the same time, what you'll see is each of these hits at the top of the wedge tends to see the VIX go all the way back down to the bottom, right? So you'll see that, and I think this is what you see. This is why we're seeing the market push higher as the VIX pulls back from the top edge of this rising wedge. Is going to go back down to here, and it's only halfway through this journey. So it gives you an idea of how much more the market could move from where it currently is. Okay, so that's one thing. And again, this isn't me being very logical. I'm not suggesting that that's definitely going to happen, but at least in terms of scope for how much the market could move, the VIX could move down into this space just as it's done. Now, one of the things that's worth pointing out as well, because it helps us understand how the market's going to move, is how erratic the VIX has been while maintaining an uptrend. So when you see, and that also helps us understand, let me clear some of these drawings. How do I do that? Hold on, let me just, Forget that. Oh, I don't know. I know. Undo. There we go. Undo. So one of the things that we noticed was that, and this is what was confusing to many people and to many participants, is that the VIX has been all over the place for months, for literally 4 months. But during that time, there was a rising weekly 9 moving average, which is almost going like this now. There's a rising 50-day moving average, which is doing this. And this is despite these cycles in the VIX. So what you saw were, these major, the decent bounces in the market like that. So the market was heading lower, so there'd be the 9. So it would lose a 9 weekly moving average. It would back test it, right? And then it would drop, and then it would back test the 20 weekly moving average, and then it would drop again, and it would back test the 50 weekly moving average. And this process of ping pong between the moving averages is so precise. It's been amazing to watch over the last 3 months how it's unfolded, and it's allowed us to be able to trade the market with a level of precision that I didn't think was going to be possible. And I want you to go back and do check that, right? So I'm not making it up, but you see how the moving averages have done that, and what that's played out in the VIX is this. So the VIX has been trending higher, even though it's been pulling back for weeks at a time along the way. And that's what these bounces have been in the market. These counter trend moves in the market have been like that. So let me delete a few of these as well before we get too crowded, right? So right now, where we are is the VIX is showing this failed breakout, and failed breakouts tend to see the price go to the other side of the range, which is here. And what I think is going to happen, and this would help, this would allow us to formulate the theory of a bottom in the market. This is what I think could happen, right? Is that the VIX, it hits here, then it fucks about, sorry, am I allowed to say that? It messes about a little bit over here.
You can say anything you want to say.
I should have asked whether I can swear, but I like swearing a little bit. So it might bounce, or it might just mess around a little bit over here. It's likely to fall through, back test, and then this is what will decide whether the market will race higher or whether the VIX regains this space and then heads back above 35. And because we're able to see that now, we're able to formulate the different possibilities on how we're going to trade that. Because there are only a certain limited number of options here. There's only 2 or 3 different possibilities, right? And based on how the VIX is going to play out, we can basically trade that pretty well. And what I think is going to happen then is, and only because I can't give high probability on a very unusual event happening. It's possible, but I can't. It just doesn't make sense to give a high probability to low tail events. So what I would naturally err on as far as how to set up the trades is look for the breakdown in the VIX, but be prepared in case it goes the other way. So what that means is prepare for this area that we're currently in to be the bottom, and see prices moving around over the next 3 or 4 days, maybe 2 weeks, whilst this plays out in the VIX over the next 1 to 2 weeks. And everything will happen very, very soon. One of the things you can see here is how little time there is for this now to resolve. This is basically the Fed. There you go. It's like you've got the March meeting over here, March the 16th, right? So you've got this. This is happening at the end of the wage. So, and we know that the Fed meeting doesn't resolve volatility. You normally see volatility for days after the Fed meetings, right? And that would be this period over here. As the media will say, the market's digesting what the Fed said, but it's really just the VIX playing out in this space over here.
And that the Fed meeting lines up with VIX expiration as well, right?
It does.
Quarterly.
It does. Yeah.
15th, I think, is when they expire. So
right.
I think personally, you're gonna that's the area where you're gonna. I think everyone's kind of been anticipating anyway, with the Fed meeting, but it's also the VIX expirations, and the Fed meeting will be the narrative, but it's the VIX, what the VIX options market does afterwards. That's going to be important.
One of the things that we normally do is I check what are the future contracts around the same dates. So we know that 35 is important. Now, if you look at the future contracts, current prices of those future contracts, they're all below 35, because typically what you'll see is a gap with the contract rollover, right? And sometimes that gap is higher, sometimes that gap is lower. Now, one of the things that I would be worried about is if the future contracts are already above 35 and none of them are. So the possibility that, it's a certainty that we're going to get a contract rollover on the 15th. But what I want to check is ensure that those contracts are all below this area now and tracking whether they are going to be above 35 on the 16th. Right now, I mean, you can see April is 30, 29, 29, 28. They're all falling, which is a good sign. I mean, because if they were like 34, 35.5, then that would make me a little hesitant and say, well, hold on a second, the gap high is going to take us above the wedge and keep the uptrend alive, right? So this is good. This is good to see. Then it supports this idea that we could actually see a bottom here.
Hey, Cookie, we've kept you on a little bit over 20 minutes, and I appreciate you. I know it's really
okay.
early or late there.
Okay.
So I'm not kicking you out, but I just want to thank you. I know it's almost 2 a.m. there.
No worries. I hope it's helpful, and I'd love to be on another call again in the future if we've got any more.
Yeah, I just emailed you. So we'll try to set up next week. But yeah, I try to do 1 or 2 of these live things like we're doing here, at least once or twice a week. So yeah, if you're on and would like to hop on, we'd love to have you in. Your conversation and your insight definitely make us all better. So thank you.
And if I just leave you with one comment, and that would be, it's surprisingly unrandom, right? We all talk about Russia, Ukraine, and how we've no idea how the markets are going to go, but it's surprisingly organized. And I think if we're able to find these markers, whether it's the VIX or whether it's the moving averages, to see how prices are moving, then it's amazing how much control you can take back, even in high volatility markets. And I'll leave you with that.
Awesome,
Thanks,
Cookie.
Appreciate it, Cookie.
Thanks, Cookie, for answering my question.
Yep, thank you.
And take care. Speak to you soon.
So there you go. The one and
Now
only
what?
pivot.
How do you follow that up?
Pivotologist.
How do you follow that up? I don't.
I mean, we can
I'm throwing in the
discuss
towel.
we can discuss what he put out there, and I think it's all very relevant. I think it's all very insightful. I was with Cookie for about 6 months in his group. I like to learn different ways of looking at things, and he definitely enlightened me to how to look at things a little bit differently. And he's been on this VIX train for some time, and like he said, it's not random. There's do you think it's a coincidence that the VIX rollover date might be aligned with when the Fed speaks, or all right? So there's a lot there to digest, but he's very good at what he does. And Cookie, I know you'll watch this later. Thank you again for jumping in. That was fantastic.
Yeah, that was.
Guys, that random comment. That's exactly. It's nothing is random, right? Like, it's all based on. Yeah, I think that it hits home for something I already believe in. That it's not narrative driven. It's not valuation driven. It's driven by the stuff. Yeah, it's not random, right? Like, you might get those once in a lifetime. Well, it seems like we're getting one every 2 years, but once in a lifetime kind of random events that happen, but most of it's planned. There's so much money at stake. It's nuts, right? So
I'm not saying that the same measurement that he laid out for us a moment in the Qs would be equal on the S&P. Cookie's definitely the type that likes the more innovative names. So I definitely know that he also looks at SPY. If there's some validity into these being matching moves, I mean, we still have another 6 or 5% to go down.
Where is that? Where is it?
Where's what?
Where's that going to be
repeat?
390s, baby.
NASDAQ 12K.
Then we'll jump back up. I guess not.
So it'll be about 3,800 on the ES. but I didn't get that sense from him, right? If the VIX explodes higher, then yes. But otherwise, I mean, we're looking something more like.
Well, he showed us the wedge on the VIX. I mean, I feel
So
like
3780, right? Like, so I don't
What's that, Zach?
necessarily.
What were you saying about the wedge?
I was gonna say, from what I saw from him, it looks like to me that we're not gonna have that crazy breakout. I think we can kind of chop around, and then that date with the Fed will have one big flush, but the VIX won't break highs, I think. I mean, is that possible?
We'll have to watch, but based on history, the likelihood of that breaking, if you take a look back even 2020 when it broke out, what was it that drove the VIX higher? It was a once in a lifetime. Well, that was the first pandemic in 100 years. So like for
That's
the
why
VIX,
I don't think it'll break out.
yeah, exactly. So if you're talking about probability, and that's what we do in the markets here, is the probability of that type of event happening here, where we've already seen a war break out, we've already seen the Fed talk up tightening and all this stuff. So you would need something out of left field for the VIX to kind of break higher, right?
So,
Even if the Fed stays exactly where they are with the stances, we're going to raise 2 to 3 times for the year or 5 times for the year. That's nothing out of the normal.
yeah.
Right.
So why do
more
we
good
think
news
that
expected than more bad news.
yeah? So why do we think the VIX has to break out for the SPY to hit that third leg?
Because
Lower.
it's not random.
Well, it's not that it's random. I feel like it could chop with the VIX staying in that above 30, right? And then have a final flush to bring it back at like that 36 level, right?
Well, I mean, we could be, peaking out at 35, 36 and it could still fail, right? So I think, we've seen pretty dramatic moves in a day's action, right? I mean, this was what percent was that?
Just
I mean,
yesterday's.
that was a
we had
4% down day, right? On the invasion yesterday, like that was a almost 3% down day from top to bottom. So, I mean, it could happen fast. And I think the alignment of the VIX pushing up, the contract rollover, the Fed speaking, I mean, you kind of have that whole ball of wax that can, basically explode. But then you're going to have some, what he called, the quote unquote, the market digesting the Fed, right? So that could be some chop. And then it's kind of like, all right, either the VIX fails here or there's bigger crisis at hand. And then that becomes the low probability, emergency type of move that he was, talking about in the market. So, we didn't ask him. Normally, if we were to ask him, he would probably give us, his opinion on what that scenario would be, whether it's 60-40, 70-30. And if he's calling it lower probability, but probability, I'm saying he's probably into the 20 to 30%, like that could happen realm, if not lower. Just knowing Cookie. So anyway, I don't want to put words in his mouth, but that's the way I read the tea leaves.
Yeah, that was good stuff. Hearing that, and I think we regardless of what we think is going to happen near term, I think we all agree that it's coming to a head near term. Something's going to happen here within the next few weeks that I think will give us the direction. Either we're going to break. And I think it's coming up if we do, or we're not. And the lows are in, and people like GP are going to be right, and we're going to start heading back up. But whether it's random or not, I think it, and even hearing from Cookie, I think it all revolves around rates in the Fed in that direction and getting clarity, even if it's just a walk back in language.
Yep.
I think that's the driver. I mean, the war, put pressures on inflation and kind of complicates, I think, the rate picture. But I think the war is not a long-term issue. It's short-term noise that is causing additional volatility. And it still is what's going to happen with the Fed and rates. And it's probably already been predetermined. The market already knows it. So it's not random, but we're going to find out soon.
Right. So I think it's always good to come back to, all right, so we've heard, from a lot of talking heads about where we're going to be at year end in terms of rates. It's a quarter point each meeting. And then it's really, clearly I'm looking for, it goes, you get 4 hikes to normalize, and then that's it. And then what's everyone's take on, or we have to wait and see, to see what he says this time.
I'm going to go as far as, even if World War III starts, I don't think it's one of those events that gets crazy. Like, it would have to be an attack on one of the world's you'd need almost a Pearl Harbor type event to happen for the out of left field event, right? Like, if Russia escalates from Ukraine to Poland, I don't think that's enough either, right? To get that kind of volatility to kind of move higher. Go ahead.
No, I was going to say that's a bold statement, GP, to say World War III doesn't. I think that's a March 2020 type scenario. That's a once in a 50, 75, 100-year scenario, and I think, this is all hypothetical because hopefully it's not going to happen. But I would be, I don't know. I'll change my StockTwits name to something of the group's choice. If we enter World War III, and that does not cause a significant leg down, and the U.S. is involved, I would be shocked beyond shocked if that happened.
But I look at that as a binary event that we're looking at. If World War III, forget it. Your portfolio is gone.
I'm not saying. I'm saying the concept of World War III is already being
the missiles
priced in.
I disagree. I think if we get pulled into this, and I see zero chance that the market holds up. But could always be wrong.
I think everyone does as well. But clearly we think that our government will not come into it unless it's, unless they go past Ukraine. That's really what it is. It's Ukraine's the dividing line of how bad this shit's going to get. Let's hope they can, fend off and get a peace treaty. I don't see it happening. I'm thinking they take Ukraine, hopefully in some type of amicable fashion. I don't see it happening that way. I think, it's going to be, but I think what's going to continue is just going to be a long fight, and, it's going to be on the news, but it's the same as how COVID was, it's like, it's over there, and then it's really thinking about oil prices again. I think we saw a downdraft today. I don't think we're out of the woods of oil until there's something signed that Russia withdraws or Ukraine rolls over and surrenders. We're going to be in this back and forth range for a while. I wish I saw it.
Another interesting little flashpoint for us, if we can remember Cookie's VIX chart that he put up with where the Fed meeting was and where the end of his wedge was. The next OPEC meeting is on March 31st. So I think OPEC can relieve a lot of this, oil issue. There can be a lot more oil released, but will they? And it looks like on the 31st is when we will know that answer ultimately.
Yeah. Like you want to play economist and geopolitical expert. It's they've got hands. They've got control. They see the demand is going to be there to a degree, and they're gonna let it trickle out until someone breaks with OPEC and starts lowering the price.
I don't think anybody's necessarily going to break with OPEC. I just think it's going to be how much OPEC is willing to produce. And I don't think anybody's going to exert too much pressure on, one answer or the other. But I do think that OPEC could release significant amount of oil if that is their desired action.
I mean, they're more aligned with Mr. Putin than they took calls from Putin, and they didn't take calls from Joe B. So it's these are clearly I know this is a technical charting group, but I can't help but ignore some of the huge macro events that they coincide. Usually it's never surprised when the charts know before anybody else. I think as a non-technical trader, I definitely noticed that the charts seem to know what's going to play out before they do. So
yeah, I mean, CNBC had somebody on earlier today who was saying oil to 200. I mean,
all
could
right.
that could that happen? Sure. I mean, I guess, but I just I have a hard time wrapping my head around some of these numbers and some of these bullish thesis, while they can be in commodities in general, but in oil, you can be bullish short term, but I don't know how sustainable that is. I shared a really good chart earlier today, and we're talking a lot of fundamentals right now. But it was from Alan Gonzalez on StockTwits. He put the asset class performance year to date percentage with CLF leading the way. So of all the different asset classes, gold, silver, energy, and crude oil are the only thing positive year to date. Gold's up 9%, silver's up 11.8, energy's up 37.5, and crude oil's up 56.4. Everything else from consumer cyclicals to tech to real estate, healthcare, you name it, Bitcoin, everything is in the red. I just don't see that as sustainable.
Yeah, no, I think you're right. Look, clearly,
could it be in the short term? Absolutely, but over a long period of time, if that stays there, then we're all going to zero. We're in the going to zero camp, and you guys know how I feel about that. I think it's a farce and a scare tactic. So anyway,
yeah, look, I wish I was a better short-term trader. When there's been enough bandied about in terms of getting to commodities. I just don't have enough of either a stomach or knowledge base to have played in that sandbox, and because it's the volatility, right? It drops what's oil down today, $9, so I just am not good enough to get in and get out.
Yeah. And bags, yeah. I mean, and kind of to GP's point, the price action drives sentiment so much that price targets of oil of like 200 are like, I don't know, snow when it is at 400, saying it's going to 1,000 next week.
Right.
When Roku's at 450, it's going to 1,000 next week. AMC to 1,000. I mean, it's just, you start getting price targets that get more and more ridiculous as the momentum picks up steam in both directions. And we're going to hear the same thing now with, that's why we've got people calling 70, 80%, 90% down, some of these stocks going to zero. I mean, it's not realistic. I mean, yeah, a lot of these growth names probably will never see the highs again, but there's going to be a core of new leaders, maybe, old leaders that become new leaders again, that will see all-time highs and then some. But not every SaaS stock is going to be at all-time highs in 10 years. There was a group of stocks that came out of 2000. We now know them as FANG. But it's a core group. It's not 50 stocks. It's not 1,000 stocks. There's a core group that have been driving a lot of the gains over the last few years, and that's what it'll probably be like in 5 to 10 years. But not everything's going to zero, and oil isn't going to 1,000.
I couldn't agree more.
Monkey. Right. I think we've got too many other sources of energy. I think that was always my conundrum is, look, we want to get off oil. But the other thing that we're, banking on isn't there yet, is just not there. And that was always how do you balance the clearly this is before the Russia-Ukraine, but how do you balance all right, clearly we need energy. There's no doubt we need energy, but how do you balance the, oil, solar, wind, exposure? And I know this is, clearly I don't think a lot of people are energy traders, but just, clearly, and I don't want to say ignore it, but just don't have it in my portfolio because I just don't have enough.
Well, yesterday on our live session, we were looking at this 426 level, and to me, the chart looks pretty constructive, regaining all the short-term EMAs on the 1 hour chart. So I think we got a rally ahead of us now. Do I think we've left a sell the rip environment? I'm not so quick to say that until we get through the next week or so. But I think we might have potentially some consecutive sessions of some green days.
Whoa.
I know that's news to that's pleasure to GP's ears, but I'm just going to go.
I think everyone's ears, but show me. It sounds good. Yeah, sure.
Yeah. Well,
So
we'll see.
The market has.
What about
trained,
CPI tomorrow?
Yeah, clearly that's an issue.
It won't matter. But it's not random ultimately. So I don't think there's a lot of weight on this conversation. And we've now, every time we've had a CPI data move, it's been polarizing, right? At some point in time, that news stops being polarizing. So anyway, it doesn't matter. I have, you guys already know where I stand on all this stuff, so I'm not going to sit here and continue to harp on it.
We've been on for a while now, but let's just go over a few things that each of us are watching, either CPI tomorrow or a chart or just anything like you're keeping an eye on. And Seth, I'm going to start with you since you're so doom and gloom.
I'm not doom and gloom by any means. I'm just saying there are things that I have my eyeball on, but again, I look at the World War III as a binary that be position long because if something bad could happen, money's not going to be the priority of anything. And that's really it. Look, CPI, keeping an eye on the VIX, and I think we're in for some more chop. But I think I definitely paid attention to what Cookie had to say, and I think clearly we got stuff in the next couple of weeks that are big until the next big thing.
I think after that lesson from Cookie, we would all be foolish not to keep an eye on the VIX.
I think we always do, but
That's all I look at, man.
Until it's right over 35, and you want to see it under 30 to get really excited. And I think we're probably going to be in that 30 to 35 range. Hopefully, we can get one of those bars down.
Zach?
Yeah, for me, it's CPI data, just getting past March. I feel like we're going to have so much clarity in March, and what I'm trying to do is survive this month without blowing up my account, like being too aggressive, either from the upside or to the downside. And just, I think right now, patience is going to pay while you want to catch that bottom, right? I feel like you just want to be careful and just try to buy the best companies if you're in it for the long game. And then if you're trading, then to not be too aggressive. Seeing if VIX can break below 30, and also looking to see if ARK-K double bottomed. I'm not a fan of Kathy that much for their picks necessarily, but I think ARK-K bottoming could be a part of that Roku bottom that GP mentioned, and maybe something to keep an eye on.
Coming from the guy who said all in Airbnb calls and SoFi puts, he says, be careful, don't get too aggressive. We've got Tommy from Stock Twits joining us. Hi, Tommy. Yeah, you're unmuted. You can go. Hey, man, thanks for amplifying us over there on ST. We appreciate it.
Hey, we don't do enough. We don't do enough. This is awesome, guys, and it's been so much fun following you all.
We'll appreciate it, Tommy.
Yeah, good to hear you, Tommy.
Yeah,
It's Monkey.
I've got a question for y'all guys. Hey guys, it's just really cool being here.
Long time listener, first time caller.
Yeah, exactly. And you guys might have already talked about this because I missed the first half of this conversation. But it's just a idea I was sharing earlier on in the streams where I think there's such an interesting sentiment where we have these kind of wild up days, which all makes us feel like we're finally coming out of this thing as far as the bear market's concerned. But there has been this kind of other popular saying, whereas some of the largest bull market days or single period days occur during bear market like cycles. So when we're looking at these kind of singular big up days, what's your kind of approach? Is it confirmation that hey, this is just what bear markets look like, or is there a little bit more of an optimistic angle where it's like, okay, maybe we're finally getting out of this?
So for me, I think it's more of, and I got to shout out Short Seller from Charts for Charity on this. He always preached volatility is a precursor to trend change, not necessarily bearishness, but trend change. And then I hear Mike Santoli on CNBC earlier today saying this type of volatility at this stage in a move tends to be the building of a bottom. Now, I've been saying that for 2 weeks, but we haven't seen any less of it. So I don't necessarily look at it as good or bad, but just potentially telling us that we might be at a reversal point, Tommy. That's just the way I look at it.
Cool. No, it makes sense. I like the trend change approach. That is a smart way to think about these things. Anyway, that's all I kind of had to share. I appreciate you, Bags, for bringing me on. And again, this is awesome what you guys are doing. And
man, thanks. I don't know if anybody else has an answer for Tommy on his volatility question, but
what was the question again?
Are these singular big up days kind of hallmarks of bear markets and kind of what we should expect during these bear market cycles, or are these kind of up days maybe a precursor of us kind of turning the tide into a more bull cyclical period?
So short term, I think it's all noise, right? Like it's the narratives that fit like whatever your bias is. I think if you're looking long term, is these volatility events as they're increasing in time over a multiple year period is showing you that we're coming closer to like a big kind of secular move down, right? So these are the warning shots that keep getting fired. And so that like a Monkey was asking about this before, is it's a conversation about the blow off top and then having like a 70-80% drawdown. These volatile events are starting to become a bit more frequent, right? So there'll be that one event where we won't have a recovery from it for a really long time. So that's what I'm watching in terms. I'm not paying attention to these one-day events and stuff like that and talking about bear market themes. Yep. All this stuff for many years now is starting to increase on historic values, right? So we had the craziest historical correction of all time in 2020, right? Fastest move down in 5 weeks, we went 33%. We've never seen that kind of move ever historically. So these are all just warning shots to me. And there's a bigger kind of secular trend that's going to be forming over some time that I'm bullish short term, but am expecting a long term kind of sideways, maybe down type market that will soon approach us and it'll grind us to a halt. I don't think we're there yet. So that's where I think where we're going fundamentally. So I know like we've seen a lot of, well, we've never seen that before, right, Tommy? Over the last couple of years. So
yeah.
It's like,
real quick, like, so someone from who's like, way less experienced in this, I guess when you talk about kind of understanding or watching volatility, like, are you talking about watching the VIX? Like, what exactly are you kind of looking at to assess, volatility?
So for me, I am watching the VIX. It's a mathematical equation, right? It's not like some the volatility is, the VIX is derived from a mathematical equation. So it's based on actual math and not. So I do watch the VIX. It's where I focus a lot of stuff on. And
Cool, man.
And the VIX for me, if you're looking at the last few days, the news has inherently gotten worse, and price targets for all commodities are going bananas, yet the VIX has continued to make lower highs. Right. So it's watching the trend as well.
No, it makes a lot of sense. I appreciate your input and insight. It's been awesome following you guys on the streams. I loved your Bitcoin chart this morning. It was fantastic.
Yeah, you flooded my notification box and tons of hate.
Parcel.
Yes, it's all good.
Monkey, what are you watching? What are you keeping an eye on? Either in the short term, the next couple of days, or through the next week.
Yeah, I mean, I think pretty much what's been said, and where I stand, just like know where GP stands. I do think we're going to break lower and really scare the hell out of people. Get the technical people all on one side of the boat when those recent lows break. But I don't think that it will lead to another 15-20% down. I think it'll be quick. It'll be a quick flush out, and we'll bottom there and then start heading higher. But what everybody said, VIX, Fed rates, some of this stuff is short-term noise. I'm really paying attention to the Fed and to the VIX. And I mean, if we can get the VIX under 30 and for some of the charts that Cookie showed, kind of break below that that rising wedge and maybe retest it, the underside and head back down. And some of these stocks start reclaiming 200 days, indices start reclaiming 200 days and holding. I think that's going to probably be a really good sign that the bottom's in.
Last but not least, GP.
You're muted.
GP.
Once,
Unmute yourself, GP.
Twice, and back
GP.
to the.
I can't. There we go. Go ahead, Seth. Finish up.
No, just back to the Fed. I feel like no one's going to be happy with no matter what he says. You're going to have the people saying he needs to give more direction. You're going to have people saying he was too aggressive. So that's either going to be, I don't know, GP go. I'm just saying that he's going to make a lot of other people unhappy, and how the market reacts to that is your guess is as good as mine.
What was the question, Bags?
What are you watching? What's over the next couple sessions or through the next week? What are you paying attention to? That's as broad as you want to make it.
Yeah. So I think on the VIX, we have VIX expiration coming into next Tuesday. You'll see contract rollovers. So you'll see potentially a move higher that continues into that. It's not going to be easy. The VIX is still 32. So every move down or up is not going to be a decision on where we're going. I think people have been long the VIX and short the market are going to start figuring out what to do next and rolling over. So you'll see them closing out positions. Dealers will have to adjust accordingly. And you'll see a push up here into that. And then you have the Fed meeting, which will increase volatility short term. I still don't think it'll take out recent highs. We've now three for the last, I'm just looking at the chart, so give me a second. Since January 24th, the VIX has not taken out prior gap up highs, right? we've had now 3 lower highs on the VIX. So I think we're eventually going to come down. I think the markets, yesterday's price action was really, really frustrating for many people, but what that showed was a big shift in character for me, right? Like, haven't seen that yet. We had a reversal off the bounce all intraday. We haven't seen all that stuff. We've seen either we have a reversal the next day and it trends the whole day and then gets sold the following day afterwards. But we saw all this stuff happen intraday, and then we closed with an indecision candle, and we still couldn't break February lows. So I'm personally in the camp that yesterday was most likely the bottom, and if it's not, it's time to put on the adult diapers.
So you're
Sam's and Costco has a great deal on those, I'm told.
Already got that covered.
Yeah. I think I'm still in the camp that if we break lower, the VIX explodes, and it's not a 1 or 2 day event, right? I don't think it's a lot worse than people are ever gonna think, and that's why it feels very kind of polarizing.
Yeah. For me, it's still Bitcoin. I think, I've gone over this at length, that we've been following Bitcoin for the last 6 months. I think that we're going to continue following it. GP, I think we had the same chart, just a little bit different. I think above this 4,500 level is bullish for crypto and equities, but we still got to cross this 44 mark, which is basically the weekly 21 EMA. Bitcoin has to cross and sustain that, has to close above that for the week, for us to see some move up. Last week's Bitcoin candle, while it is as shitty as it could be, it still closed positive for the week. So you take your wins, as small as they can be. This week is setting up to be much nicer. And if it can escape this wedge and escape the weekly 21, I think we could be cooking. So I'm kind of ready to prepare my bork Swedish chef meatballs with cookie next week on a call, and hopefully Bitcoin is much higher and leading the rest of the market too. But we might be seeing some decoupling. I brought that up yesterday on our live, that it might be sort of evening out and the equities market might be ready to take the lead. But until it does, I'm sticking with watching Bitcoin. Hey guys, we've been on here like almost over an hour and a half now. So I appreciate your time all day. I appreciate your insight. As always, we look to do these once or twice a week usually, and I appreciate all your input and insight. So thanks for joining, and that will conclude our YouTube.
Good work, Bags. Thank you.